comes to trading, specifically myself, I find what has really helped me a lot is simplifying my approach to amplify my message. And I think that, if you watch some of my old previous videos, essentially I was doing a lot of different things, which is nothing wrong. I was so profitable, doing what I was doing before, but I decided to really simplify my trading strategy. I decided to really simplify my entry model. I decided to really simplify everything and focus simply on candlestick patterns, identify hot pockets of a support and resistance, and targeting the nearest level of resting liquidity. So obviously breaking down my central strategy, or not my strategy, my entry criteria, my entry model for this specific trade. This is a trade that I took basically May the 14th, as you guys can see up here, which was yesterday's, Thursday's New York Open. Now, obviously, this is something that I do not like to trade. Why? Because we're moving choppy. We're moving in a rangy market, and that's something that you want to avoid. Now, one of the things that I also like to do is, besides this, is I also like to look for how candles print on the lower time frame at my key London low or London high. Now, recapping why I mark up my London low, my London high, because these two areas play like a true support and a true resistance. Essentially, this is where we have a lot of orders already pending, a lot of stop losses, overall a lot of liquidity from the session that we just had, which was London. Now, if I'm trading, for example, Asia session, I'm going to be looking for the exact same thing, but for New York, which was from, basically 9:30 a.m. open to basically 4 or 5 p.m. New York close. And I'm going to make that area my support and my resistance, my high and my low, and I'm going to play off these levels. Now, basically, what I also like to look for is I also like to look for candle printing, and what are we printing in the market. Now, I know a lot of people aren't really huge advocates for candlestick patterns, or all these different things, which I am a huge advocate for. Now, I'm not saying like Head and Shoulders or Hangman or any of these, or Head and Shoulders. What's it? Head and Shoulders. I know that there's the neckline and a whole bunch of things that some people use, which that could work for them. But I'm not talking about that specifically. I'm talking about what type of candle are we printing individually, which is what I like to look for. Now, yes, it is very, very key for you to know what a engulfing candle is, which I'm pretty sure a lot of people know. It's very simple. I know that it's very key to understand what a bearish shooting star is, a higher time frame. What is a bullish harmony, a bearish harmony, a tweezer top, a tweezer bottom. I know that these are very important things to learn. No, but I know for me specifically, I didn't really absorb this information just by reading the Candlestick Bible once. I had to read it multiple times for me to understand it. But what I like to look for is I like to look for specifically what are the candlesticks printing. Now, are we printing something like this where we have a small body and massive wick? Are we printing something like this where it's a small body, big wick at a small wick at the high, but a massive wick at the low? Or are we printing a huge body like so with little to no wick? Now, for you specifically watching this video, whenever we're printing these types of candles, you want to identify that we are the key areas. You want to make sure that we're specifically at our London low or our London high, or if you want to refer it as your support and resistance, that's another great term. Now, I don't want to be trading these types of candles or these types of candles. I want to be trading these type of candles. Why? Because this shows me indecisiveness in the market. It also shows me low volume, and low volume basically equals this type of price action, which is something that I want to generally avoid as much as I can. Anytime, this is how I view the market. Everyone is different. Like, you can literally, to all teach their own. Like, you can view the market how you view it, but I like to identify very early on that what type of market we're typically in. Are we in a rangy market? Are we in a uptrend? Are we in a downtrend? So I want to identify what type of candles are we essentially printing. And if you can gauge your entry off of these types of candles, especially on the higher time frame, at a very, very good spot. And if you notice, anytime we print these little candles like this, we just get choppy movement. Anytime we, even though we did print like an example one right here, what's the biggest X factor here? We're nowhere near my London high or my London low. Everything in here is just pure noise. The only way, specifically myself, that I'll ever take an entry basically in the middle is if, for example, let's say we have a massive candle like so, like this, and then we have something small like this, and then we shoot back up like this, and then we go back down like here. So something like this, like here, I wouldn't mind taking an entry off of, but taking one specifically here in the middle is a huge no-no for myself, because it just doesn't make sense. I'm going to be putting myself in a ranging market. That's not exactly what I want to do whenever it comes to trading. I want to make sure that I get in specifically on massive engulfing candles, massive displacement candles, to a continuation to the move that I desire the market to go to based on my simple system. So obviously right here specifically, we had that candlestick being printed right here, and price really just, dumped from basically this candle, and then we had a small retest, and then boom, we dropped down. So again, that is so important for you to understand. You want to be not someone that gets in impulsively. Now, for me specifically on this specific time frame, we had an engulfing candle printing on the hourly time frame, which gave me confirmation that, hey, trend is going to continue bearish. But more importantly, on the lower time frame, we were having that bearish staircase pattern. We go down, back up, big down, back up, big down, back up, big down. So that's what I was basically looking for. So once we broke here, I didn't get in impulsive. I think that's the most stupidest thing in the world, because when we have massive moves like this, we have literally a high probability chance that we can shoot back up and take out basically the high and continue back up, maybe get a liquidity grab, and then boom, drop back down, and your A+ setup worked out, but you just got in a little bit too early. So for me specifically, and my entry criteria, we had a nice break. Now, the most important thing is that we close below my London low, or if I was trading Asia, my Asia low, my New York low, my apology. Now, this is showing me that the move from that current party, whether we're talking buyers or sellers, is validating that direction is still strong. Because if we have a situation like this where we just basically tap like right here, we're gonna basically reverse, because the move is not showing me that the buyer or the seller is validating that position. Unless we break and we close, then that's when we validate that position. Now, if you don't know what a break and close is, very simple. This is what a break and close is. So let's say that the candlestick's printing like this, right? We're printing, boom, we just touch, we go back up like this, nothing's happening, and then boom, we eventually have a candle break like this, and the new candle prints, and this one already finished printing on the 3-minute time frame, and we're here, and now we have a small pullback right here at a, let's say, fair value gap, for example, and then the move just starts dumping down, and the candle prints like this, and then the move comes down here, go up a bit like that, and then eventually we hit take profit. So these are basic what I want to look for. You want to look for a essential break and close and a hold below my London lows. Now, there's other things that I look for. I want to see for maybe a fair value gap being printed, so we can play off of and then catch the move to the downside to the nearest level of resting liquidity. Now, we basically saw that right here. We broke, we had a clean break, and we were patient. Now, what did I see specifically that gave me the confidence to get into this position? Is that we had a clean, break of this candle, a displacement candle, breaking all of this down after all these engulfing candles. We had a retest at my key support, at my key resistance area. My apologies, which was basically my London low, because my London high plays like a support, my London low plays like a resistance. We had a retest at a bearish fair value gap. So this was showing me that, hey, this is a high probability setup. So what did I do? Is I executed my position based on that. Why? Because I followed trend, number one. Number two, we had a breaking close below my London low, which is number two. Number three, we had a retest at a high probable support area or resistance area where we had a bearish fair value gap being printed. And once that happened, we basically targeted the nearest level of resting liquidity following that staircase bearish pattern down to the nearest level of resting liquidity. That's how simple you basically want to be looking at your trading on on the hourly time frame. We had that engulfing candle engulfing all the dynamic liquidity we built up during pre-New York session. And I feel that if you simplify your trading, guys, like things are just going to start getting better for you. You don't need to have, I always preach this, you don't need to have a bajillion of indicators. All you really need to understand is market structure. Where is price going? Where are we going on the higher time frame? And just simply look for your opportunity on the lower time frame. Like the break and retest is probably one of the most simplest strategies. That's essentially what I do. One of the most simplest strategies that you can basically follow and then build your own little model with. Because yes, I do that, but what I mostly do is I mark up London low and London high, which gives me, in my humble opinion, a true support and a true resistance that I'm able to capitalize and take moves from. Even if, for example, we have a big move here in the middle, I'm okay with that because I understand that, if we get to our London low or our London high, I have a higher probability to catch a continuation to that direction, or maybe even a reversal. Maybe on the higher time frame we print a bearish shooting star at the London high, I'm able to take that short position down to the London lows or somewhere in the middle to the nearest level of resting liquidity. So that was my entry criteria, guys. All I did is I looked at what type of candles we were printing. I looked at basically the higher time frame analysis. I looked at basically as well following trend, and I simply just looked for a breaking close, which is the most important thing. A retest to basically a key area, which was basically my London low, which we also had the cherry on top. We had a bearish fair value gap right over here, and all I did is I targeted the nearest level of resting liquidity following that bearish staircase pattern. And I think that, again, when you simplify everything, you're going to amplify results. You don't need a bajillion indicators. If you can explain your entry model in less than 15 seconds in a very simplistic way to someone who doesn't even know nothing about trading or is starting off in trading, you're going to have an A+ strategy and entry model overall. So hopefully, guys, this video brought you some value and you're able to take some good from this. The most important thing that I tell people is take the best, leave the rest, and apply what the hell you do. Backtest this. That's my biggest advice. Backtest this whole entry model that I just explained to you guys and see it work well. It works with whatever pair that you use, in my humble opinion. I have people that I have basically shown this to, and they use US30. A couple of people use gold like me. I before was trading the S&P 500, and I recently transitioned to gold because of the shitty price action indices are giving us. But gold is extremely good. So again, make sure you like, comment, and subscribe. I'm gonna make more trade breakdown videos like this, as well as psychology videos, because the work is irrelevant unless you got this in check. So I'll see you guys in the next one, and let's get it, guys.